In this video, I'll focus on the highlights of our 10-year financial projections. 10-year financial projections are included in our business plan. If you have any additional questions about the financials, I'd be happy to review them with you in great detail. To arrive at our first year revenue estimate of $1.5 million, we've kept several things in mind. First, we used Ashley's 2006 revenue number as our year 5 revenue goal. Second, from our projected year 5 sales number, we worked backwards and reduced our sales by 5.7% per year until we arrived at our first year sales number. 5.7% is the average growth rate for a restaurant in the state of Colorado. Finally, once we arrived at a solid year 1 sales figure, we increased it to account for the fact that we'll have a slightly larger capacity than Ashley's, and we will also expect to see a honeymoon spike in sales during our first year in operation. To calculate our cost of goods sold for each year in business, we used two sets of numbers. First, we determined our product sales mix percentages. For example, draft beer sales will account for about 45% of our total sales. Food accounts for 31% of sales. Liquor and single malt scotch represent about 14%. Bottled beer, 8%. And finally, wine and merchandise represent the final 2% of our overall sales. The second number we use is the actual cost of the products we will sell. The average pint of draft beer will cost roughly 28% of what the pint will sell for. Food cost, on average, is expected to be no more than 34.3%. This means that an entree that sells for $10 should cost about $3.40 in ingredients for the food. Using our revenue projection and our estimated product sales mix percentage and cost of goods sold percentages, our cost of goods sold for year 1 is $459,000. Revenue less cost of goods sold yields a gross margin of $1,073,000. Now we need to discuss our operating expenses. Significant costs are incurred in order to cover payroll, expenses associated with leasing our building, and many other things. Our total operating expenses for year 1 are expected to be just over $1 million, which gives us a year 1 profit of $57,500. I'll now briefly outline the largest components of our operating expenses. The largest component is payroll. To arrive at our payroll amounts, we've created a detailed daily schedule for all employees, which is then rolled up into a weekly schedule. That weekly schedule is simply multiplied by 52 to arrive at an annual payroll amount. Salaries include all front of house and back of house staff, the chef's salary at $40,000 per year, one full-time manager in the first year at $30,000, and Ben and Michael's salary of $500 per week each, or $26,000 per year. Total payroll for the first year is about $570,000, or 56.5% of total operating expenses. Payroll taxes amount to just over $60,000. Taken together, payroll salaries and payroll taxes are just over 62% of operating expenses. The second largest component of our operating expenses is rent. Based upon our research in and around the Pearl Street Mall area, we can expect to pay $12,000 per month in rent. At $144,000 per year, rent accounts for just over 14% of our annual operating expense. The next component of our operating expenses is $56,000 for utilities. Utilities include paying for heat, water, and electricity. $56,000 is about 5.5% of our annual operating expense. The fourth item I'll discuss is maintenance. Maintenance includes fixing equipment such as dishwashers, broken tables, broken chairs, etc. It also includes cleaning, trash service, pest control if necessary, linen service, etc. We expect maintenance to cost about $45,000 per year, or about 4.5% of our operating expenses. The next item is comps. Ashley's comps represent about 1.2% of their sales. We'll assume that we'll potentially double Ashley's comps in order to offer discounts to our initially returning customers. Our comp percentage for the first year is about 2.5%. which on an annual basis equates to about $38,000 in complimentary food and drink, about 3.7% of operating expenses for the year. Insurance, we expect to cost about $35,000 per year. Insurance will include liquor liability, general liability, property damage insurance, business income insurance, workers' compensation, and employee theft. The remaining operating expenses for the first year are as follows: credit card fees, $24,000, employee meals, $16,000, operating supplies, $11,000, a liquor license renewal fee of about $4,000, accounting fees of $3,750, and finally, marketing and promotion at just over $3,000. So to summarize, first year revenue, as you can still see here on the slide, is projected at $1.5 million. Our profit for the first year in operation is $57,500. Now in year 2, our net profit is expected to drop to $22,000. The lower profit in the second year is primarily driven by two factors. Based on the fact that we saw a honeymoon spike in the first year of operation, we expect sales growth in year 2 to be slightly flatter. Therefore, we're expecting a 2% sales revenue growth as opposed to our average 5.7% growth. The second factor is that we are hiring a second manager at a starting salary of $30,000 per year in the second year. In year 3, profit is expected to be about $14,000. This is primarily due to hiring our third and final full-time manager. Our revenue does increase to about $1.65 million. However, our overall payroll salary expense increases by a slightly larger factor, and our overall payroll for the third year in operation is about $677,000. As you can see here, years 1 through 3 do show a very modest profit each year. Data on the restaurant industry shows that success in the first 1 to 3 years in operation is absolutely critical to the continued long-term success of the restaurant. Beginning in year 4, you can see that our net profit continues to grow every year. Our profit's about $53,000 in year 4, $94,000 in year 5, and $120,000 in year 6. Feel free to pause the presentation at any time to take a closer look at some of these numbers. On the slide now, you can see projections for year 7, year 8, year 9, and year 10. By year 10, we'll be making over $300,000 in net profit per year. We feel that our financial projections are very realistic in the initial years. All of our financial projections are based on Ashley's, again, a business that's been established since 1983 in Ann Arbor. We feel that our future financial projections are extremely attainable due to our unique offering in the Boulder market. The last slide here is a graph showing our annual net profit for year 1 through year 10. You can see that as we enter the business market, then ramp up our managerial staffing, and handle flat growth in the second year, our profit is lower in years 2 and 3, but then does begin to grow quickly beginning in year 4. In fact, beginning in year 6, again, we're profiting more than $100,000 per year, growing to over $300,000 per year in year 10.